MSME or SME as they call it is the backbone of any economy, especially for India where there is an entrepreneurial culture which is there and it contributes 30% of our GDP. Paying on time is the key.
Okay.
I think that's the most important thing which any borrower should really look at. But it's important from a customer's point of view also that if there are calls which are coming from the lending institution or the banks, don't avoid or ignore. But clearly the way forward on this is that we need to do it in a very ethical manner. RBI as a regulator for the Indian banking industry and the NBFC has played a very, very important critical role, whether it was a financial crisis, a global financial crisis of 2008 and 9. RBI has navigated that quite well.
Rolling.
And action. Hi, I'm Darshana Shah, and welcome to the season 2 of In the Spotlight, a podcast by Aditya Birla Capital, where we dive into the world of loans, investment, insurance, and payments with experts from across Aditya Birla Capital. On this episode, we are focusing on the lending landscape in India, a sector that's not only vital to our economy, but also undergoing a significant transformation. From the days of traditional money lenders and community-based lending practices, India's credit system has evolved remarkably. Over time, we've seen the emergence of organized banks, the nationalization of major lenders, and the rise of NBFCs and HFCs that have expanded credit across diverse segments. And joining us today is Rakesh Singh, ED and CEO of Aditya Birla Capital NBFC. With over 27 years in financial services and steering our NBFC and housing finance growth since 2011, he is uniquely positioned to guide us through today's discussion. So Rakesh, welcome to In the Spotlight. Today it is our first episode of season 2, and we are going to be talking about a very interesting and important category, which is all about lending and money. So where I have read and what I was, seeing that the whole lending scenario, like it used to be an era where we had money lenders and we had thekedars and we had a chit fund and a lot of things happening in India in an unorganized way. From there, the way it has come around, and in 2000 we've seen the boom of retail lending, happening, and now the whole FinTech and digital lending and all of it. And you have been in this space, and also the category is poised to grow at 208 trillion rupees, and you have been in this game since 3 decades, Rakesh. So how have you seen the evolution of this category?
So thanks, Darshana, for having me. No, if you look at, I've spent the entire 3 decades in lending. So if you look at and talking about the consumer lending, I think this was started by foreign banks in India. So early 80s by Citibank, then Standard Chartered Bank, foreign banks, and then a lot of private banks started coming in early 2000 and all. And that's the time when the consumer lending really started going to tier 2, tier 3 cities in India. And also at the same time, I think the consumer bureau or the credit bureau as we call it, that started taking shape in India. And over the last 2 decades, I think that's become quite robust in terms of, and consumers are now really aware that if they default on a loan, I think they will find it very difficult to get the next loan.
Correct.
So credit bureau growing in India, that has really strengthened the consumer side of the credit. Also, if you look at, when the private banks started evolving, post, I think 16, 17, when the digital infrastructure started taking place in India, when you had Aadhaar for KYC, then digital payments, UPI coming in, GST coming in, lot of this really triggered the fintechs to come in this space and really exploring the entire space and reaching out to the consumers to provide them a very seamless and simple experience. which banks and NBFCs till then were really, they were reaching out, but through a manual process and all of manual process of underwriting. So I think it's been a journey, but yes, from here on, this space is only going to grow.
So you've seen it all, Rakesh. You have seen it as a, being with Standard Chartered, and you've seen the whole multinational and wholesale banking to retail to various. So how have you seen the evolution of consumer? Like the behavior, like you said, because the access to money, access to credit with the, the CIBIL score, the credit bureau coming in has become easier.
Consumer has clearly evolved. Consumer today does not treat one segment to the other. So if they place an order on Amazon and they get the delivery of the product the next day or the next day, and they can track the delivery when it will get delivered. So they compare any services with those kind of yardstick.
Absolutely.
If they sit down in their drawing room and they watch OTT, and they can really customize, and the OTT platforms can customize viewing as per their preferences. That's how these consumers now compare a financial product also. And they are looking forward to, and they compare all offerings similar to that what you get on an e-commerce platform. So if they apply for a loan, the loan has to be delivered instantly.
Yes.
And if they apply for an application of any other financial product, they want to track it, what's happening to their application, and when the product will be delivered to them. So their expectations are huge in terms of delivery, in terms of seamlessness, in terms of experience. And these are the things which are going to really differentiate who really reaches out to the consumer and provides what he or she is looking for. So clearly, I think, and it has evolved over a period of time. Also, India is slightly different than a developed market. The unit economics here in India is, so earlier when the banks were there, they were reaching out to these customers. But in terms of cost of delivering was much higher because the ticket size in India. So if you have to really penetrate in India, you have to be ready to do a 50,000 rupees loan, small ticket size loan, a 1 lakh rupee loan. And when you're processing these loans, a 50,000 rupees loan, I think you will spend a lot of money in terms of processing and delivering.
Yes.
But with digital infrastructure, it has made it so much easier to process a small ticket loan and deliver to the customer.
Yes.
So I think the unit economics has really played out when you are dealing on a digital platform. And now it reaches out to tier 2, tier 3, tier 4 markets across the country. So the penetration is going deep inside the country.
Oh, interesting. So now it's not just BFSI. We are competing with Amazons and Swiggies and everything that a consumer is used to buying, and that too on a mobile phone. So Rakesh, just tell the listeners that what are the different kind of products that are available when it comes to the whole NBFC, the lending side, and on the consumer financing side.
No, so consumer financing side, you can look at transactional products. You have credit cards which are available. You have a checkout financing which is there. You walk into a store, you want to purchase a consumer durable, that financing is available. Personal loans is available. You want money for any event, I think those are available. Lifestyle financing is available.
Literally all.
Yeah, healthcare financing is available. Wow. I think the entire gamut. And as the consumer gets more evolved and they're looking for options, I think the lending institutions will have to innovate and provide customized solutions to these customers, because they're not looking for a cookie cutter product today. They're looking at a customized, personalized offering which really suits them.
So at every life stage you are saying, whether for education, I'll have education loan, higher education loan, building my business, use MSME, and SME.
Yeah, everything. And also in terms of what is the period they want to pay back in 3 months, 6 months, 9 months, they want to do. So I think that flexibility a customer is really looking at in today's age and time. So you spoke about the MSMEs, and if they're supplying to a large corporate or a mid-sized corporate, their supplies The invoices can be
Correct.
discounted immediately and can be through supply chain financing. The financing can be made available to these small time business owners. So clearly, merchant cash advance can be provided. A small merchant who's looking at buying or selling, I think you can provide and what has made it easier is because now there is a transactional history. And if you go to any small business shop owner in this country, you have a QR code and you can pay it
Yes,
digitally. Yeah.
absolutely.
And it's on a daily basis. And it's so fascinating that the shop owner is really busy in selling, and the repayment or the payment which comes in, and there is a audio voice says money received.
Yes.
So clearly, if you look at, things have become so much easier. And if the transactional history is available, the payment history is available, the transactional history is available, I think it makes much more easier for the lending institutions also to use this information, data, analyze, and convert that into a loan eligibility. So clearly, I think that's how we are reaching out to the small business owners also, apart from the consumers, which we just spoke about, that whether you're looking for a checkout financing or a consumer durable, anything on the business side as well. I think so. It's quite a range in terms of especially the small ticket consumer loans or a small ticket MSME loans. Both are available on the digital platforms.
So amazing the way the whole technology is bringing the growth in this sector. So Rakesh, coming home to Aditya Birla Capital, so how have we done it differently, in this market?
So I just want to take you back to 2016, 2017. We were one of the first NBFC to create a digital lending platform.
Oh,
And
is
we created that platform. And initially there was the cost of acquisition was quite high because you have to go acquire customers online, and then conversions were lower. So the cost of acquisition was pretty high. Post-COVID, I think things started changing.
Completely.
And also a lot of FinTech players came in, and they started exploring the larger ecosystem, both on the consumer side and on the small business owner side, MSME side. And we were ready because our platform was ready. So we clearly built our own journeys. We also partnered with few large ecosystem players, and we reached out to them to provide consumer loans or the business loans. So clearly, through our digital journeys and through larger ecosystem, we were ready to reach out to these. Also, I must share with you, we created our own online B2B platform, which is Udyog Plus.
Yeah, absolutely. That's
2 years,
fantastic.
2 years back.
Yes.
And on this platform, all loan journeys were digital end to end. And if you apply up to a certain ticket size, you can get a loan approvals instant. And then if you have done the documentation online, you can get the money credited in your account instant. So I think
imagine the expectation. एक time था where people were only wanting Maggie instantly, noodles instantly,
Yeah.
and now we are having loan instantly. I think
Completely.
that's the demand.
Completely. And that's how the expectations of the consumers are also changing. So clearly now we have the wherewithal, the infrastructure to really create. But see, lending is also a business where you give money for 2 years, 3 years. So you have to also collect the money.
Absolutely.
So it becomes very, very important that your scorecards are very strong. Your whatever analytics which you have built, that's very strong. Your underwriting, which is all happening online. That model is very, very strong. But the good news is now most of the verification, whether the KYC documents, the banking document, your other entity proofs, are all coming from the source directly.
Yeah, with the whole DigiLocker and
Yes. Yeah. So
connected.
banking behavior, everything can be done online. So I think that really provides easy in terms of understanding the assessment of customer much, much better. So I think that's how it's really playing out.
And you being 14 years and really starting the lending business, which was really small, or I don't know how, when you started, take me through that journey, when you joined ABC and I know Aditya Birla Capital.
Yeah, talking about 14 years, I joined Aditya Birla Capital at that point in time, Aditya Birla Financial Services. I joined in July 2011.
Oh, yes.
And I joined to set up a bank. At that point in time, the group was interested in setting up a banking platform. And that was the time I joined. And I must tell
So
you,
you came from Stancha to actually launch a
yes,
bank? Oh, wow.
yes, and but looking back, I think what we have created is quite incredible in a way. If you see, so at that point in time, the loan book was closer to 2,000 crores. We used to make some 30 odd crores of profit. Today, our loan book has grown by 70x. Our profit has grown by 100x in the last 12, 13 years of journey. And it has been quite an eventful journey. We have seen multiple cycles and multiple external events which has challenged the business, but we have stayed the course. So if you look at 2011 when we started, I think the entire banking industry was coming out of the financial crisis, and the unsecured loans were still not looking too good and from a portfolio quality point of view. So we started building secured portfolio. We started focusing on the SME. And that's how we started building a secured portfolio, which was catering to MSMEs and SMEs. In 2015, we set up a housing finance platform, which was a separate entity. So that was the first step in terms of diversification. 2016, as I mentioned, we set up a digital lending platform. Our consumer business started, the personal loans and the business loans started in 2016, 2017. So we started expanding our business into the consumer segment in 2016, 2017. Then came the NBFC crisis, and a lot of NBFCs went through a challenge, but we stayed the course and all. And again, as we were recovering from that, came COVID.
COVID, yes.
So that was once in a century event, and we didn't know what will happen next year or next month. We were not clear at all. And we started, and that was the time the digital transformation, which was going through in the industry, but also we took lead, and we really got into that journey of reaching out to customers through the digital platform. So it's been quite an eventful eventful journey, 14 years. But as I say, and I keep telling my team, this is just the beginning. The opportunity in this country is so huge that whatever we have achieved in the last 12, 13 years, I think we can achieve that in the next 3 years or so. So we can really double from here in the next 3 years or so. So clearly that's the size of opportunity which we are dealing in India, and scale, materiality, scalability is key. And all of that can be achieved when you are focused on your customers in terms of providing them outstanding service and providing them products which really which they are looking for.
Which is personalized to their needs. Absolutely.
Yes, completely.
Fantastic, Rakesh. I think
yeah.
you've really turned around and been leading in many fronts, for Aditya Birla Capital.
Yeah.
So talking about customer, and that you spoke about that we launched our MSME platform 2 years back, which is called Udyog Plus. I want you to talk more to our listeners that because MSME is the backbone of India's growth, 30% of growth is coming from there. So if they have to come and, want our services, and what I also know that today only 19% of them are like, they have the credit potential.
Yeah.
They are still not, it's still underserved and underpenetrated segment.
Yeah.
So how can they avail of our services and, at Udyog Plus, and what are we doing it differently?
So I think MSME or SME as they call it is the backbone of any economy, especially for India where there is an entrepreneurial culture which is there. So clearly MSME is the backbone, and it contributes 30% of our GDP. I think it's a big source of employment in the country. And I think it contributes close to 45% to the exports So clearly, if you look at the contribution is much, much more than what one can see and feel, because
Right.
providing employment to so many people.
Absolutely. And the
Yeah,
whole
I think
gig workforce is also coming
yes,
from this.
so completely. And if you go and see a shop, there will be a shop owners and there will be 7, 8 people working in that shop. That person is, that MSME is providing employment to so many people. So I think that's the way it plays a very, very important and critical role to any economy, and especially India. And that segment, if you look at, as you said, is underserved, underpenetrated, because small business owners, they were borrowing from money lenders, and you started the podcast with money lenders and family, friends at an exorbitant price.
Correct.
They were borrowing. So we realized that this is the opportunity. And with so many banks and so many NBFCs, so many lending institutions, still there's so much of under penetration in that segment. Also, if you look at what has happened in the Indian economy over the last 6, 7 years, post GST implementation, post digital payments, I think a lot of formalization of economy which is taking place. And a lot of small business owners are coming in the formal ambit of the economy. So we thought this is the biggest opportunity which Indian economy will provide us, and that's the reason we are focused on this segment. So if you look at almost 60% of our loan book, 55 to 60% of our loan book is catered to MSMEs. Yeah.
Oh, nice.
Yeah.
So we have a good sizable.
Yes. And to further enhance, we created a B2B platform, Udyog Plus. And this platform really enables small business owners to, if they're looking for a credit, they can come on the platform, they can apply, and they can get immediate decisioning. If the requirement is slightly higher ticket size, then they will have to provide additional documents so that we can assess their eligibility. If the requirement is even slightly higher, then our branch credit officers can go visit and can assess. So we have digital capability, we have physical capability. So clearly both sides and both channels we really cater to in terms of reaching out to the small business owners. So B2B platform, this has the ability to connect with the large e-commerce platform. It has the potential, and we are interconnected with ONDC, which is the Open Network Digital e-commerce platform. We are connected on OCEN. Though these are early days, but it will pick up in coming days and years.
This will also help the growth.
Completely. So any suppliers and all which is coming on these platforms, buyers, sellers, they can avail of the financing from us. So clearly, this platform can integrate with the larger ecosystems. Individual MSME owners can apply directly. It also can integrate with our internal ecosystem, and Aditya Birla Group, as you know, is such a large industrial powerhouse where you have multiple large businesses. It can integrate with the ecosystem, the channels, the retailers of that ecosystem to provide financing solutions to them. So the way we are looking at, it's not only loans. Beyond that, whatever which a small business owner is looking for in terms of their protection needs, their investment needs. If a small business owner is becoming slightly big, they need HR payroll capabilities, they want travel capabilities. All of this we bring on this platform through our partners. So the way we look at it and the way we position it to our customer is 360-degree solution, one-stop solution for the MSME owners. So I would urge all business owners, small business owners, if they are looking for credit, they can come, they can apply on this platform, and we will be able to decision their application immediately.
Fantastic. And like Rakesh said, I would also urge all the SMEs, MSMEs to check out our Udyog Plus platform, because it is not just about taking loans or credit that you need, but everything around to run your business seamlessly. And Rakesh, now coming to the whole we spoke about, and you spoke about how digitally we are ready, and the digital ecosystem or the digital lending is actually growing at 40%. That is where it's poised, and that's bringing a lot of new to credit consumers. Now, one of the questions that the consumers are always asking is that why is NBFC interest rates, and that is one of the things that they keep checking. Why is NBFCs expensive? They're 10%, 15% interest, whilst banks are slightly cheaper. So why is it not the same game, and so why should they come to NBFCs?
No, so see, interest is a matter of credit grade of a consumer. In terms of, so we offer at a finer rates, so depending on what the credit profile, credit grade of the customer is, the pricing is done accordingly. So that's how it's done. So it's not that the banks are cheaper or NBFCs are. Which customer segment are you catering to? Okay. So if you are catering to a customer segment which is potentially a high risk customer segment, your pricing will be slightly higher to take care of the credit losses in that customer segment. So clearly, the models are built looking at the credit profile and the credit grade of the end customer. So that's how it is. And why will you find this? Because most of the NBFCs really cater at the higher end of the customer profile in terms of the credit grade or whatever, because at the finer credit grades, there's a lot of competition where the banks and other players are available. So I think that's the reason. But otherwise, look at a customer pricing depends on the credit grade. So if your credit bureau scores are great, your banking behavior is great, I think your pricing will be lower.
So it's on the user, it's on the customer now to manage his or her credit score and
credit score and credit profile. So they should also look at how they can keep improving their credit profile.
So what would be the steps, Rakesh? What would you advise the listeners or consumers to do to keep their credit profile better, to get better interest rates?
So discipline. First of all, discipline in terms of paying the whenever the repayment date is there, pay before that or on that day. I think that discipline is the key, because it all depends on your discipline or the behavior which you show while once you have taken a loan, how do you really pay. Also, I would suggest and urge all consumers to once in a while go and check your score. Yeah. Right. And see what's your score is and how you can really improve that. So it's very, very important that we should track our credit scores and profiles as we go along, because a small business owner is small today. It might be a medium size tomorrow, a large day after. Right. So if you want to really grow your business and grow yourself, you need to work in terms of improving your credit score and credit profile and credit grades. I think that's a must.
So is it also about just paying on time, or is there anything else that, and in fact, I'm also going to immediately after the show see my own credit score, and I urge all the listeners to download our ABCD app, and that is where you can see your credit score, you can see where your profile is, and of course, when you need any product, any lending, we have our services on there. But Rakesh, what is it that beyond just paying, is there anything else?
So paying is just the behavior as well. Okay. You don't have to, if you're not looking for a credit, you don't go and check 5 times on. So as many credit checks you do, I think it hits the bureau and all. So I think some behaviors, some I think learning in terms of, but paying on time is the key. Okay. I think that's the most important thing which any borrower should really look at. So paying on time, that culture, that discipline has to build. Because if you delay today, I think the next loan if you are going to take, I think that the other lender or the same lender will ask questions why there was a delay.
And that's where your interest rate will also?
That your interest rates also goes up. So I think these are the behavior and the culture which we will have to really inculcate as, and it's not only from the consumer point of view. I think from the lending institutions point of view, we also should create awareness and educate our borrowers that this culture and this behavior should be really built over a period of time, and they should not miss, because at times the borrower thinks that missing one EMI is fine if you pay in the next 10 days and before the month end. But that's not right. You have to pay on the due date. I think that's really will help improve your credit scores.
I think very interesting point, because you rightly said people might just think that one miss is okay, but it's
Yeah.
actually really hurting
Yeah.
your score, and that is where the
Yes.
difference lies.
Yes.
Nice. So Rakesh, there's one more question from our consumer, the listener from Anamika from Nagpur, and she has two questions. One, she's saying that she's a freelancer and she does not get salary regularly credited to her account on a fixed date. So repaying as an EMI becomes difficult for her. So is there any other flexi option now available for people who don't get salaried every?
Yeah, there are options, flexi options. So you have to choose when you are taking a loan. At that point in time, you have to choose a date or a month. You want to pay. You have to pay interest on a monthly basis. Yeah,
Correct.
but if you are looking for anything which is more like a overdraft, or you are looking at more like a flexi loan, I think then choose those product offerings, because don't choose a repayment or equated monthly installment which you will not be able to really cater to. So choose what is the kind of repayment you need and what your business and your payment cycle really supports. So I think choosing that when you start the loan, because once you have taken and chosen, I think changing that later will be very, very difficult.
Okay, so changing is an issue. So
Yes.
one has to be very careful, and these options are available.
Yes,
The easy
these-
flexi options are available.
Yes.
Very nice. And her other question is that, so people who are new to the credit, who have never done it, so how, and then how is only salary or the amount that you are earning is the only criteria, because now they don't have any credit history. So how should they, enter the game of, wanting to lend?
So credit history is one parameter. The other parameter is the income, whether, as you mentioned, salary, the banking behavior, all of this. If you have a banking behavior, I think that also tells a lot about the customer. Yeah, in terms of how many inward check bounces, how many outward check bounces, what is the banking behavior, what is the banking turnover. All of this really helps in terms of establishing or assessing the customer eligibility. So it's just not
It's not just the income or salary that.
yes, I think the other stuff, or other I think surrogate, as they call it, can come into play.
So interesting. So, the next, what is coming to my mind, the way data and technology has changed the game. And like you just spoke about, there are flexi plans that is available. Are we also, as an industry, as a category, and also at Aditya Birla Capital, hyper-personalizing it to the consumer's need? So are we really making plans and products as per their requirement, looking at data?
So we will have to do that. But you today you create products for a cohort, especially on the consumer side. So someone who is looking for, let's say, education loan. So you're creating product offerings for that segment. If you're looking at for a car loan, you'll have to create product offerings for that cohort or that customer segment. So similarly, for a home loan, you'll have to do it. For a personal loan. So I think for different cohorts, you'll have to create, especially on the consumer side, because consumer is a large pool of customers. So you'll have to create product offerings where the need is very similar and it's more homogeneous as a group or a pool of customers, where you will have to create a more personalized offering for that cohort. So that's how the product offerings are built on the consumer side. If you talk about the MSME side, clearly, if you look at someone is looking for a business expansion, so you try and give term loans. If someone is looking at a working capital solution, so you provide a working supply chain financing. Someone is looking at more inventory and a merchant cash advance. So I think there are different product offerings for different customer segments and cohorts that which we really build. And and as we keep evolving, as the more AI and more,
Yes.
I think that will come in, I think more personalization will keep evolving and developing.
Nice. So, looking at this whole space, one of the, like we spoke about consumer, we spoke about how the products has evolved. There's another very important entity and a stakeholder as a regulator. And we've also seen over the years regularly, because there has been a lot of defaults. There is ILNFS crisis that has happened. There are various things that has happened across the last 2 decades. So the regulator has also played an important role. And how have you seen that changing, Rakesh?
No, I think RBI as a regulator for the Indian banking industry and the NBFC has played a very, very important critical role in terms of when, if you look at globally, I think a lot of economies went through their own challenges, whether it was a financial crisis, a global financial crisis of 2008 and 9, or whether other in India. I think RBI has navigated that quite well. They have been very proactive, they have been very engaging. And as I keep saying, in lending business, I think prudence is a must. Yeah, we cannot not be prudent. And the way I believe, and the mandate to my team is that we have to work within the framework of what is mandated by the regulator. We cannot test the I think the last thing which the regulator wants us not to do. So clearly work within the framework of what the regulation is. And if you look at, there has been challenges, like as you mentioned, ILNFS crisis, the way RBI dealt in terms of providing, especially the impact was on the NBFCs, the smaller NBFCs. So they really got into action, provided liquidity, funding to small NBFCs and all of that. Then came COVID. I think there were so many interventions in terms of providing guarantees on customer behalf, on MSMEs behalf.
The whole moratorium had.
Moratorium, I think they have played. If you look at the way the digital lending landscape has evolved over the last 2-3 years, and RBI has come and created a framework, a guardrail, clearly. And I think that really helps, because if you want to sustain a business over a long period of time, you need those guardrails and you need those regulations. So I'm a firm believer of prudence and regulation. And in this business, there are no marks for breaching those.
No marks for that. Absolutely, because finally.
And it's a zero tolerance for anyone.
I appreciate that, because ultimately, you're, like you said, we are in the business of giving money and not, we finally have to bring that money back, right? So it's also where the consumer has to be aware on their own credit score. Rakesh, because India is large, and our 1.4 billion population, and like you said, the access of money, thanks to internet penetration, thanks to all the other choices that is available now, everything with the quick commerce coming in, people want to buy more and more. This whole instant gratification world that we are living in, and in this space when digital is growing, do you see more tier 4 rural India? The micro, like you said, small ticket size. Do you see Aditya Birla Capital us playing a big role over there? Is that the growth spurt segment now?
Clearly, in India, if you want to be a big player, I think you have to play in the small ticket in terms of reaching out to tier 3, tier 4 markets, because India is vast. It's not... I think, though it's one country, but in a way, it's a continent. And reaching out to the small markets and small micro market is, I think, understand. Also, if you look at, in a way, if you're doing a secured lending product, every state has a different regulation, different registration patterns and laws and all. And you have to really cater to each state law and the registration process and all of that. So clearly understanding the small markets is important, going to tier 3, tier 4, and the growth, the way we are seeing growth is coming from those centers. So,
and do they prefer NBFCs or us than the banks?
See, the color of money is the same.
Is green.
Yeah. So how do you reach out to these customers? How quickly you can provide them solution? I think that's key. So turnaround time is important, service differentiation is important, brand is very important.
Correct.
And that's the reason Aditya Birla name, it's
Trust
such a
comes.
trusted name in the market. Today, the Birlas are known across the country. And so that trust factor also plays a very, very important role. But clearly, I think you have to differentiate in terms of your service and your reach when you provide the solution to
So
a
are we
customer.
looking at, is there a model that you need to change when you go to really this small towns, micro segments, and is there, or you continue seeing the same business model?
No, so in a country like ours, I think it will be both digital and physical. So
Physical.
phygital, if you look at a combination of digital, phygital, you'll have to play both the roles. And we are looking forward to playing both the roles. We are expanding in terms of branches. We have created the digital infrastructure. Udyog Plus we spoke about. Our personal loan, digital in terms of journeys, that has been built. And I think we provide personal loans to a large set of customers on a monthly basis, completely through digital journeys. So clearly, as we go to the tier 3, tier 4 markets, the branches, it will be key because customer has to identify with the brand, has to identify with the office, and we need to have collection infrastructure, verification infrastructure. So that has to be there on the ground, and the journeys and the application journeys can be digital. So it has to be a combination of both, and that's the way we are looking at going to newer markets and to many more micro markets.
I just heard, and the way we are expanding, but there are also banks which larger, infrastructure, larger penetration. So on the back of that, how has NBFCs really managed to expand?
So as we spoke about, I think the opportunity and size of India is too large. You need multiple players, multiple institutions to really reach out to the larger set of, as you mentioned, 1.4 billion people. So we need many more banks, we need many more NBFCs to really reach out to these customers.
So the opportunity is much larger.
Much larger. But how has NBFCs differentiated compared to the market, to the banks? Is in a way they have reached out to underserved segments much better. So NBFCs have been more agile. They have been able to cater to a customer segments which is completely different than the bank. So if you look at the NBFC industry started catering to just a monoline product, someone in commercial vehicles, someone in gold loans, MFIs. So they have really understood those segments and really got to serve them better. So that's how they have really differentiated over a period of time. And NBFCs is playing a very, very important and critical role in the growth of India's economy, because as I mentioned, we need many more banks, we need many more NBFCs, we need many more lending institutions, because if the economy has to grow at 6.5-7%, the credit has to be at least double of that.
Nice. So I still see, that one question always in my mind as parents, and you with this kind of, experience, do you still tell today's generations, the Gen Zs who are there to actually, take credit or go for loans? Because there was a time, and when I speak to consumers who has taken loans, they refuse to give testimonial. They don't want to talk. So in that sense, it is still a taboo.
No, taking loan is not a taboo. We all take. If you want to buy a house, you go and take a mortgage loan.
Because those are big ticket items.
But I'm
Rakesh.
saying
But
for
today
anything.
people are taking loans for everything.
Yeah, but if you want to expand your business, you have to take credit to expand your business. From a large corporate to a small MSME, everyone takes credit to expand the business. So taking loan or taking credit is not a taboo at all.
That's on the business side. And what you feel about this today's generation? They want to buy a new phone. I also see my maid, because there she's seen something, and that profile of customers, the consumers are also looking at opportunities, and they want credit.
No, clearly. And see, the credit should be available to all segments, depending on what is the risk profile, the credit score and all. And that's the reason there are different lenders. who provide that kind of credit. So clearly it should be available. In terms of there has to be education, awareness, and you mentioned the segments. I think how to build your credit scores, how to, once you have taken a loan, how do you really build that discipline culture of paying back on time? Right. I think these are the things, and it's happening. So credit bureau, which has strengthened on the consumer side, if you look at, that's the only reason. So today, a consumer is aware that if they default on one loan, it will be very difficult for them to take the second loan. So it's very, very important to create that awareness also. I think someone who's taking a loan should be aware that they have to pay it back.
They have to,
and pay it back on time.
So Rakesh, one of the constant fear in this category, whilst yes, people want credit, and you rightly said that if you've taken, you have to give money back. But for whatever reason, because one had circumstances that is happening and they have to, it's defaulted, and there is a whole intention to pay. But this collection officer fear, and I remember erstwhile there will be people, that whole feeling that the goons come or people are really coming hard on you. Is that really changed, or is still how people collect?
No, see, collection is an important and critical aspect of lending or banking. Yeah, we need to collect money, but not the way as you described. That's not the way one looks at or we are looking at. So if you look at, when you depend on a third party collection agents and all, it can happen. But what we have done is we have in-housed our collections team. Nice. So for most of our products, we have in-housed our collections team, and they are trained in terms of how they have to behave, what is the code of conduct for them, and if there is anything which is noted, we do take action against these collection agents or collection team. So clearly we have in-housed so that we have better quality, better control, and really the way we want to really reach out to our customers. But it's important from a customer's point of view also that if there are calls which are coming from the lending institution or the banks, don't avoid or ignore. Please tell them your challenges, your issues, and go and meet up with the grievance officer. Tell them what the issues are so that the bank and the lending institution can understand your issue. Don't avoid or ignore. These things happen when you keep ignoring and avoiding these calls. Yeah, but clearly the way forward on this is that we need to do it in a very ethical manner, in a way, and RBI has laid out a code of conduct for the collections across the NBFC and the banks, and we need to follow that. It's mandated when you can call the customer, when you can't call the customer. I think a lot of framework which is there, and we need to adhere. So a lot of responsibility is on the institutions themselves, but some bit of responsibility is on the borrowers also, in terms of if they are finding it difficult, reach out. Tell your issues, don't avoid.
I really appreciate it. In fact, I was also not aware, so thank you for highlighting that there are frameworks, we have it in-house. Yeah. There's a lot of empathy that we are training and how to deal. And like you said, if you are true and honest, please reach out. Yeah. So I appreciate that. I think it's fair. Yeah. Looking future gazing, where do you see this whole thing moving in the next I can't even say 5 years with AI coming in today, everything is seconds and minutes. Where do you see this whole
as I said, whatever we did in the last 12, 13 years, we can do that in the next 3 years. Or so. Opportunity is huge. We have to do it right. Yeah, we have to be customer first. Lending institution, customer is at the core, at the center of whatever we do, because at the end of the day, it's the customer because of which we all are here. So clearly, customer first has to be there. Ethos of innovating product and the journeys has to be built so that we provide seamless and simple journeys to the customers, so that when they compare it with the e-commerce platform or OTT, they say, oh, my bank is also as good, or my NBFC is also as good as an e-commerce platform.
The transparency and
Yes, the
clarity they want.
transparency and all, I think that has to be built. And clearly, I think we want to really diversify into newer customer segment, product segments, and we want to grow because I think opportunity in India is huge. We have to do it right and really maximize the opportunity which this country provides us.
So fantastic, Rakesh. I think this really looks like we are poised to grow because on the back of the way India growth story is coming out and we are all set.
Yes.
And on that note, I'm going to change the tone of what we're talking. I'm going to make it more interesting. I'm going to ask you some rapid fire questions. So I hope you're ready.
Oh, I will try and give it my best.
I'm sure you will. So my first one is what is the biggest myth about lending in India today?
The biggest myth in India is that you have to go through brokers and you have to, I think there are a lot of direct access to the lending institutions, the B2B platform, which we spoke about, which we have created, multiple banks have. So you don't have to go through brokers or through your chartered accountants or through any channels.
One lending product which has the most untapped potential.
Untapped potential, I think the MSME segment, the way I see it, the MSME segment, which is, and also let's break this down, the MSME. So you have the medium enterprise, you have a small enterprise, and then you have the micro enterprise. In India, almost 95% plus enterprises are micro in nature. Wow. Their needs are micro. Their needs are like, because there are
small mom and pop shops, kiranas.
Yeah, small shops. So I think their needs are also very something like consumer. They're looking for a small ticket loans. So how do we reach out to these micro small business owners? And that's the reason why we launched Udyog Plus. So we want to cater to that micro segment, which is the almost 95% plus of MSMEs which are present in country.
Huge.
Yeah. So we do very well in terms of providing credit to the medium enterprise, small enterprise. Industry has done very well. We have done very well. But what is left out is the micro. And how do we reach out to the micro enterprise through solutions, through digital journeys? I think that would be the key.
Rakesh, if you could simplify one lending process overnight, if you had the magic wand, what would it be?
One, see, I don't want to oversimplify the entire processing. See, as we mentioned, to sustain in this business, this is a 4-5% margin business. Yeah, banking and lending is 4-5% margin business.
It's not like fashion and grocery. Where
no, it's not. So if your credit quality is not good and if your portfolio is not holding up, I think you'll not be able to sustain and scale up the business. So I think processing should be done quite diligently, but very seamlessly. And today you have the digital tools and the platforms to do that very seamlessly and on the fly. And we should do that. So I want to simplify that process without compromising on the due diligence.
One bold prediction you have for the lending industry in the next 5 years?
Oh, I think as India is poised to be the number 4 economy this year and number 3 economy by end of this decade, I think banking and credit has to play a very, very important role if India wants to be and will be among the top 3 economy. And by 2047, if as the Prime Minister says, Viksit Bharat, by 2047, if that has to happen, credit has to play a very, very important and critical enabler for the businesses to grow, for the individuals to grow. And I think I'm quite excited looking at the opportunity and the future.
Absolutely. I think this is very exciting. I love this space. And my last one is MSMEs, retail or corporate. Which segment do you think is most in action? Where do you see most of growth happening?
Action happens across. you have to be focused and you really
Rakesh is the
have to.
action.
Yeah, the action happens everywhere and it depends on cycles. So in one cycle, you might find that the corporate is slowing down. In one cycle, you'll find consumers. But through the cycle, if you see, I think if, as we spoke, if the economy has to grow, corporate credit has to grow. If the per capita GDP from $3,000 has to go to 5,000 US dollars, I think the consumer and consumption will go up. If the MSME from 30% contribution to the GDP, if it has to go to 50% of the GDP, that credit has to go up. So I think diversification is the key.
Interesting. I absolutely agree with you and Rakesh. Super excited like you to see the growth of Aditya Birla Capital in finance in the NBFC space. So,
Completely. Thank you so much for having me.
hope you found this episode insightful. I thoroughly enjoyed talking with Rakesh, and we have unpacked how lending has evolved, the role of digital infrastructure, and how data is driving personalization. And not only that, but different loan formats like Flexi-Loans, supply chain financing, and Udyog Plus for MSMEs. Rakesh from Aditya Birla Capital NBFC has shared a compelling vision for future of lending. Very exciting times ahead. Thanks for tuning in the Spotlight. Like, share, and subscribe to Aditya Birla Capital channel. See you in the next one.